you've got questions, well, we have the man to answer those questions. Jeffrey Levine from Buckingham. Jeffrey, welcome back to another episode of Ask the Hammer.
Good to see you, sir.
Good to see you. I've got a question in my inbox. Let me read it. It goes like this. Are the rates on the money received through a reverse mortgage hinged on the person's credit score? Example, I own a house, I have a low score, but I have paid my property tax and insurance on time. Would the interest rate be different for a person with a great credit score?
So this is an interesting question because you think generally when you're taking out a loan, and that's really what a reverse mortgage is a loan, that your credit score would have a significant impact on that. But when you're looking at a reverse mortgage, the idea is that, the bank is really lending you money with your house as collateral. So there aren't necessarily payments to make. Now, you certainly can pay down your debt, but you don't have to make payments with the reverse mortgage. And so the typical issue of repayment is not so much of a concern. But what a lender may be concerned about is whether or not you can maintain your payments on a home, whether you can make your tax payments, whether you can continue to keep up the residence and so forth. Now, at a federal level, if you're looking at a federally backed or federally insured FHA loan, there is no credit score requirement at all, and it's not really gonna matter. But if we're looking at a proprietary or private sort of reverse mortgage, then lenders may be more apt to look at it. Again, not so much that you're going to be denied, but your underwriting process may be a little bit more difficult, or there may have to be some concessions made with the loan because the lender needs assurances that your property taxes will be paid. So they end up with a giant lien on it if something happens to you.
Yeah. So just to follow up with the FHA reverse mortgages, there is a dollar limit, I believe, but with a private reverse mortgage, there are not.
That's right. There are several differences between them. FHA loans are a little bit more regulated, but and obviously they have the benefit of being backed by the federal government, so it's a little bit easier process. But there are certain limitations associated with them, and perhaps one of the biggest is if you have a highly valued home or a high value home, you may not be able to extract the full value of that home via a traditional federally backed or federally insured FHA loan. You may have to go to the private market, which, again, is not the end of the world, but there are certain benefits associated with the federally backed loans that you won't be available.
Yeah. Well, folks can benefit from writing to us with their questions.
That's right. And we'll turn around those questions and reverse and answer right back to them. So if you've got a question, let Bob and I know. Email us at askthehammer@buckinghamgroup.com. Again, that's askthehammer@buckinghamgroup.com. And Bob and I look forward to seeing your questions in our inbox real soon.